Welcome to this YouTube channel. In this video, we are going to talk about top 10 ways to create wealth. So before starting this video, please like this video and subscribe to this channel for our future updates. Many seem to assume that it's impossible for the average person to get rich without an obscene amount of luck, which isn't true at all. Others seem to believe it takes wealth to become wealthier, which is sort of true but not entirely. Still others attribute it to hard work, more than the average person is willing to produce, and to smart work, which is absolutely true. Another common idea is that it's all about maximizing investment secrets and insider knowledge, not really true. Stay on top of the latest financial news, simplified for you. Number 1. Cut personal spending and control lifestyle inflation. Right here, right off the bat, is the step that causes 76% of Americans to fail. It's true, 76% of Americans are living paycheck to paycheck, which means that they're spending every time they bring in all that a person has to do. From that point is to simply cut back on their spending so that they're spending less than they earn, and have some left over with which to build wealth, but 3/4 of Americans don't do this. Spend less than you earn. It's the absolute key to every financial success a person will have in life. As long as you're spending less than you're bringing in, your finances are going to head in the right direction. The lower your spending is compared to your earnings, the faster it's going to happen. Number 2. Work hard to maximize personal income. This is the other half of spend less than you earn, increasing income. The more you earn, the more resources you have not only to live on, but upon which to build wealth and become rich. So, how do you do that? You can focus on your current career, for starters. Make it a personal goal to become a top performer at your job and move up the career ladder. Don't just look at your job as hours for money, unless your current job is not your primary focus for earning income. If it is, give it your focus and give it your all. At the same time, dabbling in entrepreneurship in your spare hours can end up paying some incredible dividends, too. A side business can earn a lot of money and can, on occasion, wind up supplanting your main job and earn you more than you ever dreamed. Number 3. Eliminate high-interest debt. The absolute first thing anyone should do with their leftover money, see the first 2 points if you're unsure about this idea, is to use it to eliminate their high-interest debt. I define high-interest debt as anything with an annual interest rate of 8% or higher. No investment can routinely beat the return you can get from simply paying down these debts. Credit cards fall into this category. Payday loans definitely fall into this category. Some student loans and, occasionally, car loans fall into this category. Debts with a high interest rate devour your money. You're essentially handing money to them for virtually nothing in return, except for the benefit of buying things a bit sooner than you could actually afford them. It's true, you need money to make money, and the first 3 steps get you to the point where you have that money to invest. It just takes willpower not to escalate your spending to devour all of it. Number 4. Use tax-advantaged accounts for investing. One of the first strategies for becoming rich is to use tax-advantaged accounts for investing, like a 401k or a Roth IRA. The goal here is to minimize the amount of taxes you pay by simply doing things with your money that the government encourages and which benefit you personally. There are a lot of ways to do this. A Roth IRA works in the opposite way. You put money in that account that you've already paid taxes on, but when you take the money out in retirement, you don't owe a dime in income taxes on any of it, not even the investment gains you accumulated along the way. A 529 college savings account is very similar to a Roth IRA, but with much higher contribution limits, and the money you take out is tax-free only if you use it for educational expenses, like, say, your child's college tuition, fees, or books. A health savings account, or HSA, is also similar, except you use the money for healthcare expenses, from co-pays to deductibles. All of these accounts serve the same exact principle. They lower your taxes by taking advantage of areas in which you want to use your money, and the government wants you to use your money. They provide tax incentives for you to do so, and, for you, that means tax savings, which means free money in your pocket, either now or later on. Number 5. Take advantage of free money. Some employers take this concept even further, and offer what amounts to free money to their employees for making smart choices. Some employers offer matching contributions into their 401k, and a few even do this with HSA accounts. You need to be grabbing every free contribution you can from your employers. If they offer matching contributions, contribute enough, so that you can gobble up every time they're offering. If they just give you contributions into an account, make sure you're signed up to get every dime of it. This is essentially a free boost to your salary. It's a very easy way to increase your income without any effort at all, so you need to be taking advantage of these kinds of offers from your employer. If you're not sure whether your employer offers anything like this, contact your human resources department and ask. Simply ask whether your employer offers any contribution matching for retirement or healthcare savings. If they do, then do whatever you need to do to get every dime of it. Number 6. Reinvest dividends and other investment income. If you followed the first 5 steps, you're likely debt-free and spend substantially less than you earn. That's the exact position that you need to be in to start building real wealth. It's also a position that most Americans can attain. Unfortunately, it's a position that most Americans will never attain, because they ignore or struggle with the first 5 steps. If you've reached this point, it means that you have a significant amount of money to invest each month. How do you invest it? Well, you're going to get a lot of ideas here, and different ideas are going to appeal to different people in different situations. Maybe you want to consider buying rental properties. Maybe buying stocks makes sense to you. Maybe you want to invest in yourself and get a better education to earn even more money. Number 7. Hold investments for a while. Let's talk about taxes again. You've probably heard about capital gains tax. It's a political football that we won't talk about in detail, but it is an important piece in understanding how people build wealth. Capital gains tax is the taxes you pay when you sell something you own for a profit. Maybe you're selling some stock that went up in value. Maybe you're selling a rental property. Whatever it is, you sold something for more than you bought it for, and you have to pay taxes on the money you gained. You bought a property for $200,000 and are selling it for $300,000, so you have to pay capital gains tax on $100,000 that eats into your gains. Number 8. Hold investments forever. The other option, of course, is to never sell your investments at all. You buy things solely for the purpose of owning them forever, because they pay out a healthy amount along the way. For example, a person might identify a company that pays a great dividend on their stock and is really stable, say, Coca-Cola, for instance, a favorite of Warren Buffett's, and they buy shares in that company with the intent of never selling those shares. They plan on sitting on those shares for life and just collecting the dividends. A person might do the same thing with a rental property, too. They buy it because it will earn a lot of rental income for the price of the property, so they intend to just sit on it for the rest of their life and collect the income. If you do it this way, you never have to face any sort of taxes on the sale. Instead, you just collect passive income from here on out. You can keep reinvesting that income, and you can add more to the pool from your own professional work, and then invest all of that to earn even more passive income. Number 9. Invest in yourself. Another option for investing that I briefly touched on earlier is the idea of investing in yourself. If you're spending less than you earn, you can take some of that money and improve yourself in various ways, particularly ways that have the potential to increase income in the future. You can use that money to earn a better college degree or job certifications. You can use that money to pay for coaching or lessons to help you master a new skill, or shore up an area in your life in which you're weak. You can use it to fix cosmetic concerns with orthodontic equipment, or LASIK surgery, giving you more confidence. The goal of all of these things is not only to improve your personal confidence and skills, but to use those newfound elements to improve your professional income, which you can then use to build your wealth even faster. Number 10. Invest your windfalls. Sometimes, life will dump some money in your lap. An older relative dies. You win a prize of some kind. You find an opportunity to flip an item quickly for a big unexpected profit. Whatever it is, you suddenly find yourself with a nice amount of unexpected money on your hands, and it can be very tempting to spend it on something fun. What do you think of our list? Which of the idea you liked the most? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go.